The price of gold right now looks like it's just taking a little bit of a breather, ready for its next journey upwards. The price of oil, is this going to go down now, or is it just taking another breather, ready to make higher prices? The S&P 500 is looking like it's ready to break out again to make its next all-time high, and the UK 100 is doing exactly the same thing. So was the stock market just taking a little bit of a breather for a few days? I think so. Are there higher prices to come? Yes, absolutely. Are some of the companies in the S&P 500's price going to go down over the coming next weeks? Yes, of course. Are they going to get cheaper? Yes, of course. Can we get them at a discount? Yes, of course. But which thing right now is the most interesting to look at? And it's silver. Silver is painting this massive picture. We can see the price of gold is continuously going up for the past weeks, but silver has been sat there nice and quiet in the back row of the cinema, and it's been sitting there saying, I'm gonna go up nice and slowly here, and no one's gonna notice me whatsoever. And then suddenly I'm just gonna boom out on the front of the stage, start screaming. And this is what you can see happening right here. This is a weekly chart right now. But look what's happening. If silver, look on the monthly chart now, silver looks like it's going to make this massive play, absolutely huge play here. And if it does break through this one line, I mean, this is like a psychological line for people, and there's going to be many people watching this. Because you see these two monthly candles now, huge green candles, and if it breaks through this previous, what is this, August 2020, if it breaks through this, we can just see prices going up now to say 34, or then even up to 41, or even up to 48. So this is something really to keep an eye on. And when people start moving into the likes of precious metals in this scale, you definitely know they are hedging against inflation or something, a recession or something bad coming in the future. So if you want an indication of where the markets are going in the future, you can definitely paint a picture from silver. Now, gold has already made its play. It's already put up its signs to say, hey, there is something bad coming in the future. Get out of fiat currency. Get out of this stuff. But silver is painting a picture of the really cautious people who are also getting into silver as well. Because if you get into gold, then you're being cautious. But if you get into silver as well, then you really know that you're getting into something a lot cheaper. So this is the premise of my video today, is gold and silver. This is still very much a Bitcoin price analysis video, but we are looking at the people that are getting out of the US dollar, getting out of the euro, getting out of the pound, the yen, and so on, and moving that money into something safe, a safe haven asset. And that is traditionally always precious metals such as gold and silver. So we can see this picture being painted right now, and we can see the past. 2011, the price hit a high. 2008, the price hit high. The stock market crashed then, and you can see just shortly after that it tanked. So these people, they know this is like a leading indicator. They know what's going to happen. The people that are investing in silver and gold, they're not investing with a few thousand. They're investing with hundreds of millions or billions into this. So they know what's going to happen over the coming weeks, months, or possibly over the next year. So let's just use this. Let's put this aside now. Let's think about what we just talked about gold and silver, and use this for the rest of the video. As normal, before we start doing anything else, let's just quickly go over the fear and greed index. So today we're still on extreme greed. We've gone down a little bit, down to 78, but regardless, that's still extreme greed, even though we've seen some lower prices. Hello and welcome to this video. My name is David Thorne. It is the 10th of April 2024. It is very early. It's 5:25 in the morning, and as you can see, this is my channel, David's Videos, and I make lots of different types of videos, from programming, drone flying, electronics, mathematics. I talk about my life in Germany, and I do any other random videos when I feel like it. But right now I'm doing lots and lots of videos about about the Bitcoin price because I am heavily invested into Bitcoin, and I want to make a log of all of my thoughts every single day whilst we are at these big highs of Bitcoin, and I want to be able to pass my thoughts, my experience, my knowledge, what I have right now, onto others whilst we are learning about how to maneuver the stock markets and the cryptocurrencies when they are making all-time highs. With that said, I am not a financial advisor. I am not a professional stock trader. I am literally just a guy sat in front of a chart looking at the price of Bitcoin going up and down. Now, this is all relative to my own investments, okay? My wife and me, we've invested our money back in 2021. We invested our money back in 2021. What could be said at the wrong time, but we had patience, we had belief in what we were doing, we had conviction, we knew that we were investing in Bitcoin on a long-term basis, which is why we kept the money in and we haven't taken any out up until I've been selling some off at a profit, and we are in full profit now. If you are new to Bitcoin and you want to know whether or not you should or shouldn't get into Bitcoin right now, and is this the right time, 63,443, should you buy into Bitcoin right now? Well, there's two answers here. If you are looking long term and you are to the type of person who can just invest your money and then not look at it for the next 5 years, then yes. But I wouldn't put all your money in right away in one go. I would put it in on a daily basis. When you wake up in the morning, 8 o'clock in the morning, put a little bit in, decide how much you want to put in one go, and then split it down into, say, many small portions, and then keep just buying it in every single morning, regardless of the price, but at the same amount all the time. And at one point, over the coming days, weeks, or months, or however long you want to split it over, you should have then had a good average price that you bought in. And once you've done that, just sit back and ignore the Bitcoin price for the next 2, 3, 5 years, and you will be the price will have increased without question. All right, so that's pretty much how the S&P 500, the UK 100, the DAX, and so on. That's pretty much how they work. They always increase by like at least 2-3% per year. But if you are a person that's going to invest right now and want to sell it in a week's time, 2 weeks' time, well, you're taking a gamble. You're better off going down the casino to do it, because at least there your odds are a lot higher, all right? And that is gambling, and stock trading is not about gambling. It's about not emotion. So if you should get into Bitcoin right now, no, you shouldn't. It's overbought, right? The price is too high. You are buying at a massive premium. So just sit back and wait. And if you've watched all of my other videos, to find out when you think I should buy, well, there are lots of other videos to tell you if you go back and watch them. But around about the 48,500 point, I would then start hesitating. I would start thinking about buying there, but not until it reaches that point am I going to start thinking about it. So yeah, this is literally 48,500. I'll start sitting there going, is it the right time to buy now? Now, with that said, in this one video, we are going to dig a lot deeper into the price, but we are going to look at the price moving down to make further lows. So this is an interesting video for you to watch, because you will understand what I look at to decide, is the price of Bitcoin going to go down even further, and is what I decide to look at the price if I believe it's going to go up even higher, and the information I use to try and work out whether or not it's going to snap up and then snap back down again, because there are a few good signals that you can see. And I've got this just literally by doing this Bitcoin price analysis every single day and analyzing the prices every single day. So before we start, I just want to remind you, right, that I do this for free. It is 5:30 in the morning. I've got myself out of bed because of the price of Bitcoin, and I'm a little bit groggy and a little bit tired. Please just do me a favor, just give me a like. That's all I'm asking for, right? If you want to subscribe to my channel, subscribe to my channel. That's perfectly fine. But please, the only thing I ask, so we'll wait for a second for you. We'll wait for you. Just get yourself down to that like button right now. Give me a like, and then we'll move on. All right? Have you done it? Okay, good. Right, with that all out the way now, let's get rid of all of the advertising and stuff like that, and let's dive straight in to the price of Bitcoin, shall we? Right. So we don't really need to care too much about the weekly basis, right? We see that it's got that candle, and what can we gain from that? Well, we really need to come down to the 30-minute market, in my opinion, the 30-minute time frame, and then just zoom out, because this is painting the biggest picture. All right. And so what's important here is there's lots of noise right now. And you might be thinking, how does this paint the biggest picture? Well, in order to see the detail, we've got to step back a little bit, all right? But we don't have to step back for too long. We just want to step back to see what is the playing field right now. And this is what I am looking for. What is the playing field for this? And so I'm going to define the playing field, and the boundaries are here. And then the boundary is down here. So this is as far as what I'm concerned, is where the playing field is. And now, right now, over the short term, we had this bottom, let's call it, is our last bottom. So let's just assume right now that Bitcoin is never going to come back down to this spot. I'm not saying that. I'm just saying that for our example, that let's just say Bitcoin is never going to come back down to this price, all right? So let's say that this is the lower boundary, and this one is then the other boundary. But right now, for all intents and purposes, this is the bottom. Now, we know that this is the top. So in order for Bitcoin to move up, it's got to breach at least this boundary here, first of all right? Before it breaches that second boundary. Now, if it's going to come down to this boundary, it's got to breach this one here, because this was a point here that it bounced on. This is a pivot point that it came down on and went back up again. And there was maybe another one here, and it came up. There was a pivot point there, and it came back down again. So we're looking now for the next pivot points. And I'm not going to start drawing any pirate flags or wedges or stuff like that, because all I'm looking for are zones where people are going to buy and zones where people are going to sell. Let's just quickly skip over this, but economics 101, if someone is buying, someone's got to be selling. Someone's selling, someone's got to be buying. Unless there is a market maker in between, right, then if there isn't a market maker in between, you can only sell something when someone's buying when someone's selling, all right? But if there is a market maker in between, then the market maker will always take the trade. Now, if the market maker is always taking a trade, it means that if the price moves in the direction that you want it to move, that they are always at a loss. So it means at one point, they are going to need to reverse the market to be able to put themselves back in a net zero status, or even to put themselves in a profit. So you have to think about is, when will the market maker change the direction of the market, right? Because if you buy down here like a clever person, buying economics 101, buy low and then sell high, then, and if it's the market maker taking your trade, then you've bought here, which meant the market maker's selling here. And if the price moves up to here and you sell here, that meant the market maker had to buy. He took your trade. So it means he was at a loss here, then he was at a loss here, or she, could be a she. So why would the market maker want to do that? And how is the market maker going to make money? Well, the market maker makes money from spread between the prices, but you know, they still had to, when you bought, they had to sell their Bitcoin and then they had to buy it back here at a loss. So at one point, they've got to flip the market to try and make money. And this is how to try and get into the market. You need to think, where are they? How are they going to get into the market? And this is the key thing right now. But the basic rule book right now is all we care about is looking for the places where they are going to try and take profits. Now let's assume right, that you were clever and you placed a long trade down here, right, at this point here. And you put your stop loss. You put your stop loss here, right? 59,300, and you went to take a huge profit, and you got up here and you took the profit. Super duper, right? Super duper, whatever. Right, so now let's assume that the next person came in and placed a short trade here and set their stop loss up here, and right now they believe that it's going to come all the way back down to here. So we've seen this one person who's bought in and sold high, right? Trade done, profit there, and then that person took a short, put a short in, and they wanted the price to go down. Now, right now, the market maker is at a loss because you sold here, right, which meant the market maker had to buy. And then if you buy it back here, that meant the market maker had to sell. So they're now at a loss. So what the market maker wants to do is to trap people. So what about if the people bought here, right? The people bought at this one point up here with the hope, right, that the price went up. So this is where the information gets really interesting. So the person, let's move this down a little bit. The person bought at the top, right, and put a stop loss, say here, hoping the price would go up. Now, as we can see, the price dumped down. So this person, and this is, listening to this, this is where it gets interesting. It might get a little bit technical, right, but just listening. So this person here, there's not this person or this person. This is another person. This person here bought here and the market maker sold. So the market maker is taking the correct trade here. He's taken, or he or she, let's just call him he because it's easier. The market maker bought down here, let's say, in his own money, and he sold his Bitcoin to this person at a profit. So the market maker is now in profit, right, to this person. The price drops down. Let's say the market maker had a load of Bitcoin and sold it off as quick as possible to drop the price so he could buy it back ready for other trades. So the market maker dumped the price up here as hard as possible with his other market maker friends as well. So they all dumped the market ready for them to all agree to buy it back down here, right? Because big wick down here. So the market maker's in profit now, and they've made enough profit to be able to take these other trades from other people. But this one person up here is unhappy because their stop loss, they had to keep on moving the stop loss all the way down to not lose money, right? And now they're like super negative position because they've keep moving their stop loss, right? But as time goes by, the price moves up and the person thinks, oh, I'll just move the stop loss up, and it gets to here, for example. It gets then to here, for example, and then the guy moves the guy moves then the stop loss up a little bit further, and it keeps moving up. You understand the point here, and it gets up to say here, right? And then the price then goes, oh, it comes back down again, all the way down to here, and the person keeps moving the stop loss down, and then it comes back up to here. So on Monday at 2 o'clock, the price went back up to there. And this person is still now at a loss, right? So this person can either cut their losses, right, and sell the Bitcoin, and the market maker can have that money back at a profit because this person bought meant the market maker sold, right? And the market maker right now can buy their Bitcoin back at a discount, right, all the time. So they know that wherever they buy their Bitcoin back here, they're always going to be at a profit. It doesn't matter. And they've got spread as well on it, and they're doing their job. So they've got to take the trade, but all the way here, they're at profit. So do you think they want to have the price move up any higher than this? They don't want to get this person, they want to allow these people out of that trade. So they're going to allow the price to come all the way up with the hope that these people think, oh, I've now broken even, or the price is going to get higher. But they want to trap. They've trapped more people, and this is what happened, right? This is what happened yesterday. They trapped more people here. They trapped more people here. They trapped more people here, and then they trapped more people here. So now there is liquidity, and this is the magical word, right? It's the magical word. There's liquidity stuck here now. Loads of people buying. right? Loads of people buying. And if someone's buying, someone's got to be selling. And if someone's selling, that means they're taking profits or they are capitulating. Now, with prices so high, the people that are selling are taking profits. Just like me, I was taking profits as well. And I was taking profits around about here, quite hard actually. And then I took profits hard there as well. So these spots here, this is taking profits. So right now, should you buy right now? Well, you shouldn't buy up here, and you shouldn't buy here, and you shouldn't buy here. You shouldn't buy here. You shouldn't buy breakouts, right? It's not logical to buy breakouts unless you know that it's actually going up. So how can you work out when to buy? Well, let's now jump in to the lower time frames, right? Because we've now seen the picture up the top. We know that this is a possible trap, because you know that the prices could possibly go down. Now let's assume, right? Let's assume that the market maker has trapped people into here, and the market maker doesn't want people to get out of that trade. So he's like, I'll bring the price up to here, and when the price comes up to here, I'm going to dump it back down again to trap these people in as well. So we've now got people thinking, oh, wait a minute, we can buy Bitcoin now at a discount here, which you could if you were going to sell it up to here, but you need to have an exit place as well. How are you going to get out? And so if you're thinking, I'm going to buy here and then I'm going to sell up here, I think you might get disappointed, because I don't think the price is going to come up here. I think they're going to entice you to come up here to then think it's going to go, but then they're going to snap the price back down again. So right now, how can we work out whether or not this point here is a good buying place? And this is the question. This is the main question of the video. Is this right now a good place to buy Bitcoin if you are looking to sell it here, or if you are wanting it to go up even higher? So right now, we just care about short term, okay? And that's the only thing we want to care about, is our short term time frame. So what we see right now is the 300 EMA is below the 200 EMA, which means, in layman's terms, is that over 300 time frames or candles here, the average is lower than what it is on the 200. So it means we've got a downwards trend, a big downwards trend right now. And this is the 50, this is the 15, the 8 and the 5. So it means that they're all, the 5 EMA is using only 5 candles, the 8 EMA is using 8 candles, 15 candles, 50 candles, 200, 300 and so on, all right? So right now we see an inversion of all of the EMA candles. So we know that there is a downwards trend. And right now we saw price come back up and try and close out of the 50 EMA, or above the 50 EMA, sorry. But we saw price snap back down again. Now the thing to notice in all of these pivot points are these red and blue, or these red candles, right? So red to sell, and then what you want to notice then, the green or the blue is high volume as well. The blue at the bottom. So we're looking for when the market turned. Like blue at the bottom here, there's not a huge amount of volume in blue, but there's definitely more, all right, than a light candle. So you're looking for these quick snapbacks, and this is where the people with lots of money, lots of volume, are snapping the market back again, and they're moving it. And right now, this is the bulk of the video, right? This is what you're waiting for. What we need to come to here is to look at these points here, right? And the likelihood is when I am editing this video, I'm going to add probably a picture, maybe, if it happens whilst I'm editing the video. But so let's now move down into the 5-minute time frame, because we've now got our lines set. And we can just correct them a little bit, because this is where it gets important, right? This is what I do. This is what I base my judgment on. Okay, so now we have our lines set where we want the market to test the market, right? Because we know that we've had pivot points on that. We've had lots of buying pressure on this candle, lots of buying pressure in here. Look at this green candle, lots of volume there. We had lots of buying pressure here. Okay, so much so that we're going to put a box around it as well. because we saw that was strong buying pressure on that one there, and we saw some strong buying pressure there, but that had a big wick. So when it came down, there was lots of volume and there was lots of strong buying pressure there. But you can see that it kind of engulfs all of these candles here, and there's only two of them candles that got through, and purple is quite strong. It's not nowhere near as strong as red, but it's like a blue candle, so we know there is a strong support zone here. So what does this mean? This means that in order for the price of Bitcoin to go any further, it's got to push through first of all this one zone, right? Now we see here that we've got this one test down the bottom, this second test down the bottom, and this third test down the bottom. And we saw that the highs are getting always a little bit lower. Okay, let's just ignore this one. We need to really look at it a little bit, but it was just a quick surge in price, but then snap back down again. So we can kind of say, okay, fine, the volume cancelled each other out there, but we have to keep it we have to keep it in mind. So the selling pressure is stronger right now than the buying pressure, right? So that's because it can move the price down. But we now need to ask the question is, which one is going to run out first? Are the buyers going to run out first, or are the sellers going to run out first? Now, if the sellers run out first, but the buyers continue to stay in the market, then we're going to see the price move up pretty rapid, and it's gonna move up really quickly to at least this line here. And I would say after that it will mingle around a little bit around this area here. So I would expect it to do a little bit of bouncy around this area here, and then we should expect it to more than likely just zoom through this level here and then do bouncy once again, bouncy once again through this area, bouncy through this area, and then bouncy through this area, and then we could see it spike through this one area. But I would say that it's going to correct on this one line. Now, when I say bouncy, I mean it's just going to do lots of accumulation. It's going to go sideways for a time. So I believe in this zone, it's more than likely going to go sideways, unless it's just got absolute euphoria and just pumps up. That's the other thing. So if there's real sentiment and momentum behind it, and it's got strength to push all the way out of it, then it will do, you know, the normal like few candles to come up here. But if it does that, I would expect 100% just snap straight back down again. Okay, but if it's got strength, it will go up nice and slowly. It will test this zone and it will go up, it will come back down, it will test this zone again. And so I would assume if we are talking about it going up, it will come up here and it will come back down again, and it will test this zone, it will come back up, it will test this zone once again, and then it will come up here, and then it will come back down here, test this zone again, then it will come up here, down, test this zone to say that this is resistance, and come up here. This would be slow, right? And this would be good if it's going to keep this area. If it's going to balance all of this once again to come up and have strength. If it's going to have strength, then this is what you're expecting it to see. To always come back and test the previous resistance zone to say it's now a support zone. So this is like the perfect scenario. Now that is the going up. The going down is the exact reverse. All right. We would see that the price has got to come back down again and test this support zone and weaken this support zone, and more than likely weaken it again and weaken it again. At one point, the buyers are going to run out, and if the buyers do run out, it means that the buyers, this completely arbitrary position, might be down here. But we know that this line, this orange line here, there is buyers down there. So the likelihood at one point it's going to have a pivot point on this one orange line here, and this is the same scenario now, right? We would expect it to spike through this and come down to here, and then come back and retest it, and then go through, come back and retest it. So you always want to see retesting. But is the price of Bitcoin here going to go up or down? Was our main question. Well, the market is the master right now, and so we need to go with the market, and we can see that it's going down. So we should assume that the price of Bitcoin is going to go down. Now, it can correct back up to here, but it can lose power and come back down again. So I would highly expect that we see the price of Bitcoin come and feel this area, right? This is an imbalance, this big red candle, there's an imbalance here. So the price would be healthy to come back down here and then retest it. But this is what you get when you start analyzing the prices. You start looking for these things, and as you zoom back out again, you see contradictions. All right. So this red candle here, we need to see it be balanced between here if we know that the price is complete, right? And what I mean complete, well, we don't want it to spike up and down, up and down. We want it to go up and down nice and easy, and then it doesn't have to come and balance the order book once again. Now, I think we could go on forever speculating about this, and I think it's best just for us to leave it as a future look back at to see how it went. But the long and short of it is that the more it tests this one support zone, the weaker that support zone is going to get. And if the buyers run out, then it will go down. But if the sellers run out and the buyers are still there, then the price will go up really fast. So this is the thing to see. You want to see, if you use my indicator, you want to see a red candle, a real hard red candle, or at least a purple candle, pushing through this one zone down to here, and then come and retest it and then back down again. It doesn't have to have purple all the time, but you want to see at least one red or purple candle in it to show there's volume and it's moving out. And the reversal down the bottom, you want to see a blue candle or a green candle, this green candle here or blue candle at the bottom to see when it reverses. These light green and light red candles, you should ignore them. They should just be normal movement, all right? But any reversals are always need to have volume when it's going to reverse. So when you see the price moving down with low volume, just go with the flow with that. But when you suddenly see higher volume, like a maroon color or a purple color, you know that the price is going to change direction right now. So with that said, I hope you've got something out of this video. It is still early in the morning, so I'm more than likely going to make another video around 9 o'clock or 9:30. So I hope you've got something out of this. And yeah, and that's all it is. And I might go back to sleep again. But anyway, otherwise, thank you very much for watching. Let's just quickly go through my philosophy. If this is the only video you watch of me today, then let's at least go through what my philosophy is. Right, so I am a contrarian through and through, all right, and I don't like going with the herd, but the market is our master, and right down here we know that this is the bottom because of history. It paints a picture, but we don't know right now that this is the top. It could be the top, but we don't know. Now, for me, I care about long term, but we're not talking about that right now. But when the market moves, the market is the master. We have to go with the market, all right? We have to trade with the market. And so if it's going up, then go up, right? But right now we have to assume that the herd wants the price to go higher. So until we see signals otherwise, we have to go with the herd. But right now, when we see sideways motion, this is the time to put on your contrarian hat, right? Put on your contrarian hat and just be cautious. That's all. Don't be a full-on contrarian. Just go with the market and say, well, okay, if it keeps trying to push and make new highs, then we can see that the sentiment is still there for it to go higher. And if it has the power to move, that's the momentum to move, to keep going, then it does have it. But when you see like these sprints slow down, or they get too big, if it too big pumps up, you know there's going to be a dump down. But this nice smooth movement going up, this is nice. Then a consolidation, a nice, I mean this was too fast, but this is nice slow movement going up, and then some consolidation. So we are expecting here to see the price break out of this and then move slowly like this angle here, up to say 78,000, probably go across for a little bit, and then it might come down slightly and then move up nicely again. That's what we're expecting, for us to keep our going with the herd hat on, right? But if we start seeing the price come down and test this 55,900, that is time for us to start thinking, okay, our contrarian hat is possibly on now. But that's why I took some profits here. And if it does move up a little bit higher again and test this one upper boundary, if it comes and tests up around here, about 66.3 or something, I'll start doing a little bit more selling again, but only on a small scale. I mean, I'm talking about selling a little bits at a time, like breadcrumbs, just selling it off and trying to get the highest averages possible in one day. So that's what I'm doing. And then if it just suddenly starts spiking through, if it just suddenly starts doing huge green candles again, I'll pull off the selling, and I'll wait for it to do some consolidation. And if it does spike above this, then obviously I'll stop selling and wait for it to consolidate once again. But around here, I'll probably do a little bit of selling here, maybe. But if it drops down and I miss out, at least I sold the other day and I've got some profit taking. That's good. But all right, with that said, thank you very much for watching, and I will see you in the other video after the stock markets have opened. Thanks then. Ciao, ciao. Bye-bye.